Hey, how we doing, guys? Welcome, chat. Thanks for tuning in. Wanted to thank the Futures Desk for hosting this. I'm really excited to chat with some veterans in the space. If you didn't know, today we're going to be talking about order flow. We have some experts in the space. I am an order flow trader as well. I trade it every day, so we're happy to get the comments going so we can get some questions for some of these guys. First of all, did you guys trade today? How are you guys feeling about the holiday markets? How'd you feel about volume today? I felt, pleasantly surprised with some of the moves we got. We grinded up a little bit and took a little bit to break out of some of the areas that normally would have gone. I feel like without a hitch, I was getting some options guidance from one of the guys in my stream, and that tended to be helpful. But just want to overall get a gauge on how y'all's day went. And yes, of course, Merry Christmas to everybody. Looking forward to that this week as well. So without further ado, wanted to, after we get some comments in here, we got some PA was nice today, slow volume. Yeah, I actually agree with both of those, which would seem to be contradictory, but today it kind of seemed like the case. So today, I wanted to quickly go over kind of what this is. We don't want to dig in too deep because we want to respect y'all's time, but we do want to, give an overview of what order flow is and how we use it as traders, to hopefully inspire some questions from you guys to continue to learn. And I think everybody here is going to be happy to connect with you guys over there with, any questions you need to have answers. And then, I think for me at least, after these sessions happen and you continue to have questions, feel free to reach out, to me or any of the other guests on here. And I'm sure anybody on here is happy to help you guys if you need further clarifications. And we encourage different opinions. If somebody doesn't use order flow and you want to kind of challenge that, we're happy to take on discussions like that. And then we want to, I want to encourage all the guests on here. If you have something to show, to illustrate to our guests, then feel free to share it. Also, we're going to be doing a giveaway, Christmas giveaway, and it will start after 100 YouTube likes. So you guys hit that like button, get that going. There are also going to be some other giveaways too that we'll go over a little bit later. So first I want to do some guest intros. Let's just start let's go clockwise. Niels, and what I'm going to ask is, what do you typically trade and how much do you lean on order flow on a scale of 1 to 10? And we can get through these intros and then we can kind of dig in a little bit deeper if that makes sense.
Sounds good. Hey guys, how's it going? So I've been trading for over 15 years now. Order flow, I would say it's a 10 for me. It's my main thing. It's my go-to. Yeah.
And Niels, you have a little platform, don't you? That might be helpful for everybody who might be interested in learning order flow or putting it into use on a daily basis. So why don't you really briefly talk about that as well?
Yeah. So I went on a big journey building my own platform. That started like 6 years ago now, I think. And we finally launched it this year, luckily. But a lot of bumps on the road. Right now you get it for free actually with Futures Desk if you have Rhythmic. So that's pretty cool.
Cool.
And it was just something. I was missing so many things at the time, mainly trading on Mac and at the time there was literally nothing that was like up to par, to really trade with speed and on Mac or on the browser. So that journey was quite interesting. Yeah.
Perfect. Well, we'll have some more time to go over some of this stuff in detail. Thanks for sharing. Let's move on, and then we'll circle back and dig in with some more specific questions for everybody here. Rizzo, what about you? Can you give us a brief introduction, and then how much you lean on order flow?
Hello, everyone. It's Rizzo. Been trading intraday at least for about 7 going on 8 years. Yeah, primarily trade NASDAQ, ES, and of course metals at times when it's moving. In terms of like relying on order flow, I would say it's only like a 2 or 3 for me, unless we're unless we're talking about using market profile, which I want to say is order flow, but technically not the definition of order flow. But at times I do still look at a DOM. I still look at the footprint. Although it is order flow after the fact, I think it still applies and is very useful. Gives us a pretty good insight on buying, selling, where the aggressive participants are and whatnot. So
cool. All right, thanks, Rizzo. And Jagger, you're up next.
Hello,
Mr. Orderflow. I actually love that name.
Yeah, it's not me. Actually, there are two of us, and the big boss wasn't available today, so I'm here. I'm running the community for him now. So yeah, order flow for me. It's essential. I cannot live without it. I'm probably the only one here to trade treasuries, fixed income products, short-term interest spreads, but that includes also not only trading the classical curve, saying like from ZT to ZB or OB, the belly, etc., but also having a broader macro landscape. So watching the currencies, watching the metals, and trading them, of course, metals, energies, equities, of course, European markets, whatever. And yeah, I use ladders for my execution. It's essential because like treasuries are very slow and structural markets, so they respect liquidity. It's not like in Q or ES, no. So liquidity is very important, and I use bookmap, so it's like my in-depth view, and market profiles, footprints, whatever. And yeah, I trade from like 10 years or so, something like that.
Thanks, Jagger. Also, thanks for that old Pamela Anderson poster in the background there. It's a joy to see. Josh from Trade with Profile.
Yeah. Hey, Johnny.
Hey.
So first, the question was with respect to we use order flow. How are we defining that? Is there a mutually accepted definition that we're using? Because that would impact how I would answer that question.
Sure. So I think first, what do you trade on a daily basis? And then if we're talking about the definition of order flow, I mean, I would probably say if the viewers are watching and it's something that they don't trade with, like if we're talking footprint charts, for instance, volume profile, I would say, and then just essentially looking at per price orders. There are a lot of things I think that could encompass order flow, but I think you use your best judgment on that.
Yeah,
maybe define what you think it is to you.
Well, I would. Yeah, that's helpful, and I think it's helpful for someone who's trying to carve a way out in this space. So I got started in 07, kind of went full time in 09, and primarily I spend time on kind of what I would call the key liquid products, which would be NASDAQ, Russell, ES, crude, gold, some soybeans on occasion. And that's intraday stuff. Anything more than one day is typically multi-leg options or complex spreads. So shout out to Jagger and the TT setup earlier, running I've got the steepener on. That's been my best trade all year. So it's been really good. When I think about the order flow, I think what we're all trying to do is we're trying to discern the intent of the auction. And so I would say that these are all tools that are used, whether you're viewing that through a market profile, a volume profile, a footprint chart, a delta profile. I mean, these are all things that you're trying to use to discern what is happening at certain prices. So, if you would say, do I use footprint charts? I'd say, yeah, I'm like a 1. Do I use market volume profile? That's like a 10. All of those are ways to discern and follow and interpret what's happening in the flow of orders currently, and what is the expectation based on that's going to come forward. So that's my attempt at defining order flow.
Sure. Great. And then everybody knows Josh.
Hey guys.
from TA. And then
Yep, I'm just here for composition.
okay.
Make sure we have equal boxes. No, I don't get to trade as much lately, but order flow is a big part of how I fine tune my position entries and exits. It helps me stay on the right side of the trade early on, and I'll usually take a very quick, tight stop out if it doesn't work because I'm looking for a bigger move, and I just try to be on the right side of short-term order flow. But I generally don't lean into it for larger moves, even for my full intraday positions. For that, I'm looking at more market structure in terms of market profile, like Rizzo over there, and I'm sure several of you as well. But time spent is usually what I'm looking for in the longer term. And then as we get closer, volume and order flow.
Nice. And myself, I usually focus on NASDAQ futures, and I use order flow quite a bit, and not just for real-time updates on aggressive buying and aggressive selling and passive buying and passive selling, but I actually use it to define my levels, and I use it pretty granularly. So a lot of you guys who are here previously saw that, I essentially export all the, tick by tick order flow data from NinjaTrader, and then I have it categorized, looking for imbalance stacks, looking for absorption, looking for delta flips, and I use those as key levels. And then I have a carry forward method with scoring, so confidence scoring on each one of those levels. So when I'm putting levels on my charts, I'm usually looking for a sort of game plan pivots on these levels, where if below here, we might be looking for liquidation. If we're above here, we might be looking for a squeeze. And then also, one of the latest entries is, some people from my stream are adding options flow data to that, but I rely on it pretty heavily. I'm looking at the Delta footprint chart for entries. I'm looking at it for confirmation. And in addition to that, my higher time frame levels that I'm looking to carry forward, if they've been mitigated or not. I'm using order flow to determine what's important and what's not. Versus just potentially bouncing off a level without a meaningful reaction via price and volume. So I rely on it pretty heavily, and most of you guys have seen in the previous videos how I use that. But wanted to just say we are past the 100 likes on YouTube. And Roz, did we want to go ahead and announce the winners right now, or did we want to save that?
I think we hit the 100,
Yep.
and then we open up the link, so now people can start registering for it, and then we'll do the giveaway closer to the end.
Sounds good. All right, so everybody get registered for the winner, or to win a $200 credit later. And I believe, if I'm not mistaken, we're doing 2 of those, right?
Yeah, let's do 3. Let's do 3 $200 winners, and then we'll do some merch too.
All right. It's going to be a Merry Christmas then. Some guest specific questions I had for Josh, Trade with Prof. So you often talk about, and these come from Raj because he knows you a little better than I do, but you often talk about the 4 questions you ask before taking every trade. Can you walk us through those 4 questions and explain how each one applies specifically to reading and executing with order flow in real time?
Sure. So those 4 questions are a process that I developed over years of working with traders on our desk that were executing as most do based on impulsive action that they see in the market. So what I often see when I do audits of developing traders, I see traders that the trigger for them, or what tells them that there's a trade, is something like an order flow spike. There's an impulsive, whether it's an imbalance that is earned, but something that has told them, oh, there's some momentum, I want to jump on this train. Which, not to negate that, but the larger question is to where? Like where do you plan to get off of this train that would necessitate getting in it to begin with? And this is one of the key distinguishing traits between what I would call a professional or institutional trader and someone who is in the retail land, is that professionally and institutionally, we define a trade first by where we believe that the price is going to go. So that's the first question. The first question is, well, where do I believe, based on how the auction is behaving right now, that price is going to go? And what's my hypothesis for that? What behavioral statistics and normative behavior would inform that is a reasonable expectation? So for example, would be, hey, maybe we're expecting 200 points in the day in the NASDAQ futures, and we've done 170 points of that already. So is it reasonable for me to expect that we could see another 30 points? Sure. Is it reasonable for me to say that we'd see another 200? That's less reasonable. So there's some reasonable case for where price is going to go. It could be a reference, but it's the place that you're going to offset the trade. That's question one. The second question is, then what would I risk for that trade to go after and get to that price? So that's where you can use a lot of these, what I would call very micro lenses into auction behavior around price, to find other participants who want to go towards that destination that you want to go. Now, you don't know whether they want to go to the same destination or not, but what it's great is that when you're entering, you have other participants who want to go in the direction that you want, because then that can also help you decide, what are you going to defend? Like, how will you know that you're wrong? And that's the third question. So first question, where do we believe this is going to go? Second question is, what would I risk to go to that place? And that's where we can use those order tools to find a spot of inciting behavior that we could join. And then the third question is, okay, once I'm in this, how should this play out? You know, one of the ways that we answer that question is, okay, if I'm joining off of, let's say, an order flow spike or a price delta imbalance, we should not go back through that price. We may retest it, but we should not see meaningful acceptance beyond it if that's what I'm leaning into to get towards my destination. And then the fourth question is, what shouldn't happen? You know, like if I enter, when all of us enter a trade, we're all storytellers to some form or fashion, and we don't know what's going to happen yet. We have a belief of what's likely to happen or possible to happen, but we don't know what's going to happen. And it's very, very important that we prime the brain for those times when it doesn't happen, because then we can say, okay, yeah, it didn't play out the way that I thought it is. I can cut the capital, I can cut risk and look for the next one. It's been my conviction for a number of years that if a trader does not use those four questions before they pull the trigger, that they should not take a trade, that they have not worked through enough of the framework of their process to essentially, I had an old mentor that would say that it was earning the right to pull the trigger. So those, I mean, there's lots of great tools that everybody's going to hear today, and some really exciting stuff that people are building. But the only thing that I think I could give you that I can guarantee would be better for you tomorrow would be if you use that process whenever you place a trade. You know, if you said, oh, I'm going to get in off of, you know, some small time frame impulse. Okay, that's great. And you could call it an order flow spike trade. Okay, fine. But to where? Like, what price off of that justifies why you would put risk capital on in the first place? I mean, years ago when I was running a desk, I have a risk manager who comes and, you know, he can see all the trades that I place. Often, if it's a larger size trade, he's going to say, hey, you know, what's the hypothesis here? What are we doing? Where are we going that justifies the use of this capital? It's a great question for each of us as individual traders. So yeah, those four questions: just what's the opportunity? What I risk for that opportunity? What, you know, how should this go once I'm in it, and how should it not go?
Awesome. Hey, Josh, just a clarifying question. So, you know, you talk about the importance of having, you know, where's this going to justify getting in. Yeah. And you had mentioned maybe we're doing a 200 point range in NASDAQ, and maybe we're going to go an additional, you know, some points, but should you expect another 200? No. What would be another example of, you know, a reason to get in a trade that's verified by what the target could potentially be? What's something that you know could kind of give to the viewers to?
Well, so we've got some market profile fans in here, and what's wonderful about market profile, which is looking at time at price, is it helps us organize the auction. All of these things are helping us organize the only indicator that everybody can see, and that's price, right? Like every chart, no matter what time frame, price is the one indicator that everybody has. So all we're trying to do is organize that. But if I look at a rolling 5-year look back period, if I am inside of the prior day's range and I have not yet tested the time point of control, so the volume point of control, not just the time point of control, but the volume point of control of the prior session, that becomes a reasonable target. So let's say that, we've flirted around with new territory or new ranges for an hour or so, and then we extend range back into the prior range. The probability that we would go on and continue and test the prior day's point of control is about 70%. So 700 instances out of 1,000. That justifies putting capital at risk. And then it's easy to say, well, what should happen? I should stay inside of that range. If the idea is built that I'm not going to be able to accept into new ranges, well, how would I know that I'm right? We'll continue to build inside the prior range. How would I know that I'm wrong? We get back outside of that range, right?
Yep. Okay. That makes sense. Let me run to just a couple questions and then we'll get back to it. How can I add order flow? I use TradingView. What is order flow? Okay. So broad strokes on that one, but let's start with how can you add order flow? So, various platforms. I mean, I would give you an easy answer and say Neil's Trades has a very easy answer for you. How do you add order flow? Because he's created his own platform that seems to be widely regarded as one of the best out there. So I would probably leave it at that. I myself, if you use NinjaTrader, there is an add-on that you can add on to NinjaTrader and various other platforms. But I'm going to push Neil's platform here because he's here with us, and I'm sure he's going to be happy to help you understand how you can add it if you so desire. So that answers that. And then I struggle understanding order flow. It's tough. Yes, it's going to take some time before you really understand what's going on because it's a little bit outside of the box. You're used to looking at candlesticks, and order flow is kind of showing you what's going on behind the scenes, behind the price, to help you understand why price moves, not just that price is moving. I would say so. It's going to be a process that's going to take some time. I would recommend watching some YouTube videos, some introductory videos on YouTube, and then hopefully us here will help you have a better understanding to give you a foothold into order flow that you will then have to launch yourself out of to start your own learning journey. So I'll split up the questions. I'll get some of those answered after we get to Neil's. And the question for you is, what pushed you to build your own platform, and what were you specifically trying to show or visualize better in raw order flow that existing tools weren't handling well?
Yeah, so first of all, I'm a big Mac OS fan, right? So at the time, there was almost nothing that either worked with Rhythmic or Mac or nothing in the browser really, right? And it's still pretty limited. I created my own software, like plugins before for Investor RT and NinjaTrader, and I'm just very unlucky with that because right after I released it on NinjaTrader, they came out with their own order flow thing for the first time ever that they released something themselves. I'm like, okay, cool. So I was like, yeah, I have a lot more ideas of how to make it visually more appealing or more clear to see, and I didn't want to be dependent on another platform, on top of that. So there was a lot of things that came together that I said, like, look, okay, we're gonna take on this journey and we're gonna go for it. But it's been quite the journey to tell you something. So yeah,
it looks very clean. I like the
UI. So exactly. So I'm maybe because I'm now too old at this point, but I like the draggable windows. You don't have that very much on the web-based platforms. Like this is a browser, as you can see.
Yep.
So I like that a lot. Just be able to put it wherever you want. This is pure tick data. So to go into the question about TradingView does not have like pure tick data. So they aggregate data. So on a general level, I think it's sort of similar, but if you want to be really like scalping and swing trading intraday, it's not the most accurate data. And with Rhythmic, you do get that. And for example, with like CPG, things like that have real tick data. So that's a big difference. I know why they don't do that, because it takes a lot of performance. You need to work a lot on performance on the back end to be able to process all the data, because it's a lot. Like when, for example, when the market opens, things like that, I think we can have about, just for the ES, I solely trade ES, they have like 40,000 quotes per second. So that it all needs to be processed, and that's easier with aggregated data, but then you miss some details. So it's a lot of things that came together, and we're still not there. We're still building, right? So we're not stopping. Like we're gonna do soon, I hope, early next year, going to do a little webinar because we want to create a TPO chart too. Right now, I'm mostly using a volume profile, right? And for me, that's perfect. But I know Josh and other Josh, they probably want to have TPO. So we're going to do that. So we have copy trader coming. So there's a lot of things that are coming. So it's pretty cool. Yeah.
Very cool. So I'm going to hand off a question to you. Otherwise, I'm going to be answering all these questions. So we had one question. How much value do you guys put on large orders above or below the bid as zones for attraction?
I'm assuming they're talking about limit orders, like resting liquidity. I don't know if one of the other guys want to chat about that.
I don't mind if no one else will, because I'm looking at it. If no one else wants to take it, I'll take it. So I look at it a lot. So I have like three, like a process of 3 steps. So one is the volume profile, the second one is the footprint, and the third one is like the final trigger for me is the dome. So I do look at the limit orders, but depending on where they are, they could be either fake or real, right? So depending on where the range is, it's kind of more experience if I can figure out if they're real or not. Like they're like, oh, that's probably gonna fill, or like, oh, they're gonna pull. So with that experience,
intention, they should be real.
Yeah, but that's not the case. Yeah, that's very often not the case. And
which the CME too, that there are some regulations they have, private regulations, in terms of flashing orders.
Oh yeah,
expecting if you do place limit orders down, that you are expecting them to be filled. So, and these are the kinds of concerns as a prop firm owner that we have to worry about, because we're the ones who take the responsibility for you guys when we put you on a live desk. So, those things you don't really hear about in sim, because you're flashing orders on the
it's not real
books.
right?
It's not going to matter. It's not going anywhere. But once you start doing it live, they'll start. CME is going to contact us and potentially fine us if you're.
Yeah, but even if you do it with a 10 lot or something, they're probably not gonna. Well, unless you do it like 10 times a second, then they might get to you. But they do it with like 100 lots, right? 500 lots, 1,000 lots, and I still see them doing it, and I'm sure the CME calls them and says, "Oh, I'm sorry, we're not going to do it," but they don't care. I think that's what I think, because I see it so often still. Like after 15 years, I still see them doing it, and I know there's been a lot of discussion about it, but I can see it in my dome. I have like the bits, and then next to it is the executions. I can see that they're not getting filled, like they're going to get pulled. So it's very interesting.
Yeah, the general rule, Niels, is that if it's discerned to influence book volatility, then they'll act. Right. So if they see it and they don't discern that it's significantly impacting market or auction activity, then they'll give a hall pass.
Yeah.
And that was the cause of, or at least that's the chain that they said ended up causing that flash crash back in the late 2000s from that guy that was just in his parents' basement trading. He was an ex-institutional prop firm trader. He was at home and he started realizing he could start tricking these algos into thinking that these massive orders were on the books, and he actually reverse engineered it and started moving the markets in his favor so he could take out, I think he took out like 10 million before it fell down a mountain and crashed everything. But I think it was the ES that he was flashing, he was flashing trades on the ES, and then that just made its way through all the markets, and pretty bad scenario that he went to jail for. So,
It's an interesting topic. I think some of the firms just have too much money, and I see it happening every day. That's the thing. It's funny. Yeah.
I think a helpful takeaway around like rested orders is if you're and this is what I would tell anybody, is if you're leaning onto a rested order as an expectation that that's going to go, or you're going to go and fill that price, you're likely to be disappointed.
Yeah. And Swagmaster, I wanted to add this. There's a difference between a resting order sitting out there and then what actually gets filled. And Josh, I think that's what you're getting at. And so if you have a resting order out there, it might be an indication that could be a level you want to watch. But ultimately, it's about what actually gets filled there. So that's what you're going to see on the footprint. And so when you're looking for signatures that are happening in the market, you might have a resting order there that maybe it gets pulled, maybe it gets filled, but the real sort of blood on the ground is going to be when it gets filled, and then placing the context around that, whether or not that's going to be bullish. If price pushes into that level and gets stopped, the order gets filled and you have absorption, for instance, or if it pushes through and you get acceptance above that level. So I think the real sort of nuance lies in what actually happens at that level, and then how does it fit into the overall context.
Yeah,
and also
remember now that based on some recent studies, ES is not anymore the great market that it was. I mean, it only makes up for 30% of the derivative volume for the SPX compared to the past. It's now almost all dominated by SPX, options flow, and dealer hedging on the ES.
Yep.
So it makes a very, very big impact. And what we are seeing on the book on ES, of course, it's real volume, because if price stops at a level, it will build up a high volume node. If it skips some prices, it will build a low volume node. But in the end, it's mostly dominated by options this way. Order flow, it's still options flow, it's still order flow, in just on a different market and with a different interpretation. That's really no difference. Like, there is order flow in everything we do. Like, you go to the shop, that's what order flow.
Right.
You buy some groceries, that's order flow.
The tail wags the dog. But it's a good point. And I mean, this is something that has significantly changed. I mean, we were checking in before how long everybody was in markets, but in the decade or so roughly that we've all been in markets, the significant change has been how much the tail wags the dog. It always has. The derivatives always impacted it. But I mean, when I got started, we never cared about OpEx. Like, it just wasn't a thing. And now I don't know how you discern the flow or intention of the market without understanding what's happening in its derivatives. Especially now, I don't think that's a fair statement to say about all products, but particularly ES, NASDAQ, less so the Russell. Yeah, if you're looking at the ES and you're not looking at derivatives, I don't know what you're doing.
Jagger, you trade a lot of treasuries, right?
Yeah, I do.
So talking about just resting liquidity, the matching algorithms in treasuries are a bit different. So you might actually see, liquidity sit there a long time with full intent, maybe a greater intent you can kind of bet on of being filled. Do you want to kind of talk to that?
Yeah, absolutely. Well, liquidity on treasuries definitely play a big role. These are all my ways. Yeah, I see that you're sharing my screen, so you can see it. Probably I use Bookmap to see liquidity. It's like a tape. Let's see, Bookmap is a tape, no? So all these bubbles are sell trades, buy trades. And of course, you've got the heat map. It's quite different because you almost always, until it isn't, of course, based on other confluences, etc. But liquidity is almost always supportive. I mean, if there's a buyer here staying there despite all of this aggressive selling, it does mean that he is a real buyer. There are no tricks. Treasuries play a lot less tricks than other markets. So it's quite easier. I mean, I always say to somebody who asks me about markets, etc., and order flow, it's much easier to learn order flow on a honest, with big quotes, market like treasuries or other lower markets like, I don't know, corn. I know trading corn isn't cool. It doesn't sound like I smashed 10 lots on NQ, I mean, but at least you have a honest, pure order flow, because it is the derivative. There is an underlying. You have the underlying treasury market, the largest market in the world. So it's tens and tens of trillions of dollars around the world in treasuries. So these are the derivative market for that. So, but they will follow the underlying one-to-one, and they are structural, they're honest, and easier, I would say. I traded the S and NQ for a long time, but it's like sometimes it's like a roller coaster, Mm-hmm. It's like it's volatility. Sometimes it jumps and your emotions jump. I would say, slower markets are more calm, and you take a coffee and you stay there and you place your.
You can make a full pot of coffee and it stays on the same bit.
Hey, Jagger, I had a quick question for you. What kind of computer does it take to run 4 bookmap windows?
Oh, nothing so special. It's an 13 gen i5 and
not too taxing, huh? That was one of my issues with bookmap. To be honest, it was pretty taxing on my CPU resources.
Yeah.
But Jagger,
my doggo jumped in the room.
Oh, okay.
It's probably just a 13 or 14 gen processor should do the job.
Okay. One more question for you, and this is coming from Raj. If someone is early in their trading journey, what's one habit you'd encourage them to build that has nothing to do with strategy?
Oh, that's a very good question. It's a great question.
Yeah.
Start to think about it like a job, and apply, with the prop firm space. And it's easy to confuse trading with going and play that as slot machines, because you have a kind of sense of control of what do you see on the charts, so it might be better than gambling, but you definitely should make your own journey. Don't listen to anyone. Study, and I don't know what else I would have to say. Like, apply, like if you were at the university and you were paying $10,000 per month to study. So it has to become your job because you really want it. And don't listen to anybody that is like in the communities. It's easy to like argue with somebody and stuff like that. But make it your own. I don't know how to describe it, to be honest. But from the very start, apply on it like it was really your goal for your life. Be consistent every day, 1-2 hours. Well, when I started trading, and for a lot of years, even now I love trading, and I still study. I dedicate weekends, all my free time. Well, it's my real job. Trading is my job, so I dedicate to it like 8-10 hours per day. It's not like you got a Lambo and you go to the beach and on vacation like 2 weeks per month. It's not. That's not the case. So a good habit would be, study. Whatever material you can find, study it. You find another material, study it. Your friends ask you to go out every day, don't go. Study and study. I know. Yeah.
I think that's a really good answer, Jagger. And just to dovetail on that, I think it's in this day and age where, people are just getting into trading, and prop firms are such a low barrier to entry. I think it's important to take it seriously, because if you keep treating it like it's a $50 prop firm account or whatever it is, you're going to create bad habits. And you think, this time will be different. When you keep doing making the same mistakes over and over again, all you're going to do is instill bad habits. So I think it's a really good point, Jagger. Treat it as if it is a full-time job, because if that's what you're trying to make it, that's how you have to treat it.
Exactly.
Yeah, great. Okay,
thankfully nowadays we have prop firms like the futures desk, which have a very clear path to a live account.
Yep.
And you get coaching, etc. So that's really very different than the traditional prop shops that we have online. So
Indeed.
you people
Appreciate
watching,
that.
well, take your chance, build it, and don't reset. A reset for you is a failure. I mean, it's normal because the drawdown is small. No, you have to pay another time to have a reset. It's fine. Okay, there's no strategy that doesn't have drawdowns consistently. That's completely impossible. So a drawdown is normal. So you're gonna lose that $2,000. Okay, you got another one, but eventually, go on. Josh will open an account for you. They will assist you, and yeah, it will be very different. It will be already a job, no?
We've got seats on the exchange to extend to you, so your commissions are going to be even lower than what you probably have in your personal account. So
Yeah.
hopefully the package it makes sense to people. But yeah, we're on the fringe end of what most of these prop firms are in the space. So I appreciate you mentioning that, Jagger.
Yep. And, just to emphasize that point, the futures desk, and I've said this previously, what they offer with their platform is hands down just has a completely different objective than other prop firms that are churn and burn and want you to buy as many accounts as possible. The tools you get with the futures desk to journal, track your trades, track your stats to improve day by day, I think is very aligned with treating trading like it's your job and treating trading like it's something that you aspire to improve on every single day, getting a little better every single day, as opposed to just churning and burning and trying to get lucky on passing accounts. Raj, did you put that Christmas? Oh, you put that Christmas sale up there right at the right time, huh? There we go.
Let's do one more question, and then we could go over to do the giveaway, and then we can answer some more.
Okay, that sounds good. One more question. Let's see. Where do you guys see the difference between continuation and reversal in the footprint? And Rizzo, we haven't been to you yet. Why don't we give you that one? So where do you see the difference between continuation and reversal in the footprint? Or I can't remember.
Sure.
Do you trade footprint?
Yeah. I can touch on that a little bit.
Okay, cool.
Well, it's either or, right? So obviously we can't assume. It's very hard to assume you're going to reverse until you start seeing it and then see some confirmation. And by confirmation, I'm typically looking for, let's say we're pushing up, right? You start to see an exhaustive high, and by exhaustive, I'm typically looking for no more aggressive bids at maybe like the top 2 or 3 ticks, especially on NQ is what I'm looking for, or maybe top 1 or 2 ticks on ES. Usually some lighter volume on the ask. I want that push up to be on higher delta than the ones before. Once that starts to maybe spike down or flush out, you want to see an imbalance, right? And then you want to see, I think Josh touched on it earlier, you want to see it defend that imbalance. So there's your invalidation point. So I guess that's how I would spot a reversal. Continuation, I'm looking for usually the opposite. I'm looking for, typically, I'm not looking for a continuation into highs or well past highs. I'm usually looking for this sort of coming off of a low or coming off of a pivot more so. I'm typically here. I'll pull it up on the footprint here. Which I'm on a 30-minute footprint. Maybe I can go down to a 5 or something, but I'm typically looking for, let's say, coming off of a low. You want to see, you're sort of reversing that example and saying, I want to see exhaustive buying or exhaustive selling into a low. Maybe not too much here. So you can see, I really want the profile to taper off. And then you want to start to see a couple imbalances. This is a bad example because I'm right in the middle of the overnight session. But what I typically want to see is an imbalance. If we do pull back into that imbalance, I want to see tapering. I want to see continued aggressive buying after that little reaction. And that's sort of where I would sort of step in. I'm never the one to initiate it, right? I'm not playing that much size. So continuation reversal. I'm not much of a continuation trader, so I'm never really pressing it on a breakout. I'm more so playing the retest after I've seen other participants try to defend it, and try to backpack along with them. Hopefully
Copy that.
answered some of it.
Yeah.
Let's articulate that in a little bit different language, because I know what you're talking about, Rizzo. Let's articulate that like I was in a semi truck going down the interstate, right? So what is the thing that we're looking for when we see these impulses of behavior? Because essentially what's happening is someone's acting on information, or someone had an order to fill. There's something that creates that impulse, right?
Mm-hmm.
What we don't know is that order over? We don't know.
No.
But we can at least see where there was enough of a need to be in the position that allowed for a more intensive size and momentum to go off. So the belief is, and it's a belief, is that unless that is invalidated, coming back toward that scene of the crime would invite additional participation in that direction. So like what you articulated of, okay, I see this impulse move away. As I see selling coming back in, the initial move is what we'd call initiating, right? That's the stronger move. As it's coming back toward that in a responsive way, it's not going to take out, or there's not a turn in the market unless that initiating buyer was taken out. So anything that's responsive back in that direction is just an opportunity for buyers who missed the initial move to get in. So that's as you're looking for that selling to taper off. That's a good clue of, okay, any interest in selling this thing is kind of going out of the way, and we're expecting those buyers to step back in, which is why it's a fascinating behavior to look for and use tools like this to be able to discern that. I mean, guys, we're in the golden age of software. I mean, like what Neil's done is remarkable, because I'm a Mac guy too, and I run everything in remote desktop because there isn't great Mac software, but the access to incredible tools to help you organize price is higher than ever before.
Josh, there wasn't great Mac software.
Do what?
There wasn't. Past tense.
There was not. There's been terrible.
Now there is.
But that being said, what's important for any of us who participate is what is the meaning of what that tool is showing us? Like what does that actually mean for me as a market participant, as an auction participant, in what I'm trying to express? If you don't know what that means, or it's really easy to go down the route of like, oh, I'm looking for this percentage of imbalance, and that means do something. Does it? Like, it just means what it is, right? It means, now, if I fold that within a system, or within those 4 questions, or your playbook setup, it could be really meaningful, right? Because it could get you really excited about taking action, or it could mean no, like none of the other inputs that would bring me to action are in play, so it means nothing. Just like what Rizzo said here is like, we're in the after hours, so yeah, I see this imbalance, but I wouldn't act on it because it's not within the time frame that I would act on. Those are important things to get your arms around.
Yep. Yeah, it's all based on context, and like you said, if it's something you've back tested and these sort of metrics make sense to you, and you can put it in action, and you got a profitable risk to reward, then it makes sense to take these things you're seeing on the screen and potentially turn it into an opportunity. I wanted to share real quickly my screen. I don't know, Raj, if you can do that. I'm sharing it right now, but if you can put that up. So right here, I wanted to show, this would be an example that I would be looking at, for instance. So right here, I have, big orders turned on. And right here, if I'm looking at this, what I'm seeing, and you can see it over here on the footprint as well. But what I would be looking at here is we have a nice sell-off through a key level that I had marked, right? And under this key level, I was looking short. But once we hit this level here, and you see that we have aggressive orders, these are sell orders right here. And once you see that price is not budging on this, and you see it followed up with buy orders that are getting acceptance through this candlestick, it might not mean get in immediately, but what it means right here in this moment is you had kind of a surprise drop through a key level, and now we had sellers trying to push price down, and we have a lot of effort being placed in volume, but not a lot of action in price. And you see now that when you have the follow-up of buyers coming through, as if we're talking about reversals and continuations, you can have, an exhaustion at the end of a candle, or you can have aggression at the end of the candle that then is met with passive buyers. And in this sense, the passive buyers absorb all of these, and now you have a recipe for fuel on the fire, meaning that we might have trapped sellers here, and it might not come to fruition until you see it break one of these key levels. But at this moment, it tells me to be watching at the very least, because we could have a springboard action out of this price area, because now you have sellers that are in trouble. Whereas right at this level, I would be looking at this as a continuation. So it's a reversal from this point and continuation from this point. But hopefully I'm illustrating this correctly.
So Johnny, what's the trade here? What would you call this trade?
Well, I would say it's probably no trade here, because I'm observing, right?
Yep.
So we move down here. We show that we have a potential reversal, but it's not confirmed yet, I would say, until you get over this level and over this level. So here, if I'm framing this from a point of a reversal or a continuation, here I would say we have a potential reversal that's showing signs that we could have a potential reversal, but it's not confirmed until here. And so this is a reversal turned into a continuation.
And that's the potential reversal based on what? And I'm asking questions for people
Order
in the
flow.
gallery.
Order flow. This would be order flow alone plus levels. This so this 25.653 I had marked out as a key pivot level, at least for me, based on my data, where if we're under here, we're looking for shorts. But if we end up sweeping this level and coming above it, that would be a potential long trade from down here. So having that frame in mind and then seeing a rejection here. And again, what I'm talking about, if you're looking for reversals, in my opinion, what I see on the chart that ends up resulting into explosive moves is you have sellers that are off sides and you have buyers that are aggressive. So in this scenario, we had sellers trying to push price down. They had a lot of effort and no movement. And then you have aggressive buyers willing to push the price up from here. And then here was the confirmation.
Yeah. So let me also translate that to those that don't have this nomenclature. So something that you mentioned, I think it was really good, is you talked about a passive buyer. So like, what does that mean? Because a lot of people don't know what that means. It means that there's a resting limit order out there, right, of size that needs to be fulfilled. I know I used to be this guy. So if you're familiar with the term of iceberging, like let's say I've got 1,000 contracts to execute, but go look at the DOM and what's at the bid and the ask, right? How many could I execute at that price? I can't execute 1,000. Now, there was a day when you could, in the ES, you could go 3 or 4 ticks and do a 1,000 lot order. You can't do that anymore. It's very, very thin in the book. And so what institutional players or professional players are having to do of size is you have to layer those orders out there, and they're getting hit. What we don't know is how big those orders are. So what happens is, like when you look at a delta or order flow, which shows us what? It shows us market orders on the bid or the ask. So if I've got a limit buy down here and I've got sellers that are coming down, but like it's got size, let's say I've got 1,000 to do, but I could move it 10 ticks, 15 ticks every time I fire off a portion of that trade. And every time the price will try to come back to it, it'll hit that and it'll fire off until that sucker's gone. But in that argument around that 620 area, eventually that scale tips. And so like what you have, which is a great example there, is you have momentum lower. There's this expectation it's going to keep going lower, which is where all this aggressive behavior is coming in, but it's not getting any follow through.
Exactly.
So the phrase that you said about people getting nervous, what's happening is, imagine if you're selling into a position expecting follow through lower and it's not happening. The longer that takes, the more we as humans will get nervous. So what are they going to start doing? The seller becomes what? A buyer. So when you show that example of it flipping the aggression the other way, that behaviorally is what happened. And that's something that all of us looking at these tools, it's really cool to be able to see, right? Because it's just predictable human behavior, like it's with some nuance around that, right? So great example.
Oh, thank you. Yeah. And just real quick, I'm going to show this and then we'll move on. But really quickly, I just wanted to kind of emphasize the difference in these two levels here, right? So, so right here, look at these sellers that are trying to push price down, and look at the response, right? We reject, and as we were talking about, now these sellers potentially turn into buyers, and it probably happened right around here. But now look at when these big buyers show up at this key level, look what happens here. It's the complete opposite of this, right? So if we're looking at signatures in the market, and all of this can be verified over here if you're looking at footprint charts, but this is a little simpler to look at. You have sellers trying to push the price down, it gets rejected, and look here, it's the exact opposite. So this is kind of reversal and continuation in the same example. Here it's continuation because you have buyers really aggressively putting their foot on the gas, and you have price being accepted through these levels. Here you had somebody with limit orders saying you shall not pass, and then that caused fuel to be thrown on the fire here as buyers are trying to push up the price. Now you have sellers trying to get out of their position, and you have aggressive buyers breaking out from right here. So we can move on from that, but I thought I would share that because I think I noticed it this morning, and thought it would be a simple way to show that. Rizzo, we need to get back to you. We have a question that we'd like to ask. You're known for leaning heavily. Oh, actually, I apologize, Josh. You want to do the giveaway real quick, right?
Oh, you can keep going.
Okay, cool. Rizzo, you're known for leaning heavily toward long trades. How did you arrive at that bias over time, and what was the thought process behind realizing that the long side fit your read of order flow and market structure better?
I think it's no question that over time markets go up, right? So if you're going to stick to one side, why not go on the winning side?
That's right.
I think that was the main. Other than that, it was really just I would position I'm more of a position trader, so I try to position myself below value on an intraday basis. And I was always stuck in this scenario of being in a position, seeing price, let's say, hit my first target. The question now is, do I take off all of it? Do I trim half of it? Do I press the reverse button? And it just became more confusing to me. It made me press more buttons, which you never really want to do, right? I think making more decisions in the market's not necessarily a good thing, especially for me, because my win rate only sits at around 40%, 50% on like a good week, good month. So the more buttons I press, the more likely I'm going to be wrong. So if I'm going to play one side and let runners run, it was going to be the long side. And that's sort of how I've come to that conclusion.
Okay, great. Let's go ahead and get to the giveaway. Should we start spinning the wheel?
Let's do it. Oh my God.
All right.
It doesn't crash someone's computer.
All right.
And by the way, I just want to remind everyone, we've talked to everyone here individually on our stream. So if you want to dive in and learn more about anybody here, at least once we've interviewed, I believe, everybody. So just check back in our YouTube history and do that. But yeah, let's go ahead and spin the wheel. And then I'll nominate Josh Schuler to read the first name.
All right.
Because I usually can't pronounce them correctly.
Please offer grace. We want to honor your name.
This will be $200 credit. You can use it however you need. If you're already with us and you're needing a reset, hopefully you don't, but you can use it towards that or a new assessment.
Oh, Ethan Kim, you are a winner.
Oh, Josh, nice. You lucked out. That was an easy name.
That was super easy.
The universe was smiling at me.
Let's give Jagger, you can read the next name. $200 credit again. Then we'll do another one of those, and then we'll throw in some more merch spins.
Oh. Michael Sio.
Sounds right. Congrats.
Yeah.
And you guys will be
Congrats,
getting
guys.
emails shortly within the next couple minutes with the credit notification. Last spin for $200. Byron Webb, I guess I'll do it.
Nice. Nice. And
All
then
right,
we
let's
actually have oh, sorry, I was just gonna say we got
Okay.
2 TFD hats and 2 TFD shirts.
All right, 4 more spins.
This will be for a hat. Andrew Jason Bernardi.
Cool.
By the way, I really like the merch. It looks really good.
Props to Raj for that, pun intended.
Nice. All right, this is for another hat. David Snyder.
Dave Snyder.
Right on. These are easy. Rizzo, we'll give you the next one. Hopefully this will be a tough one.
This is for a shirt.
Yeah, sure.
Oh, it gave me a tough one. Calgary. We'll stick with Calgary.
All right.
Last
And
shirt.
one more. Last shirt.
And a little surprise for everybody. Let you know right after this is done. Ruth Nyoni.
There you go.
All right, so if you didn't win today, we're just going to give everybody a $20 credit if you entered. So it doesn't expire, and you can use that again towards anything. We hope the new traders that are watching take the opportunity to give us a chance and see what you think. See our tools, our team, coaching, everything we do. You know, we're just trying to make better traders and grow together in live brokerage accounts and not just keep you in sim forever. And yeah, so you good traders out there, come use those $20 credits. And then the bad ones step aside. No, I'm kidding. The bad ones come on in, and we do have practice accounts. If you're super new, the practice accounts, I know people are like, well, I can't get an evaluation and get funded off that. It's like, maybe not everybody's ready for that. Maybe you shouldn't be spending so much money. So we put out these practice accounts. You can use the entire stack, all of our platform tools, all our analytics. You get access to a platform and data, and you can try your strategy out without breaking the bank. And you can, you know, make use of that. And then if you're happy with that and you feel like you're ready, step it up to an assessment. And then you can start right at an assessment and take that route if you feel like you're ready. And, you know, we've pretty much got the shortest path possible to live brokerage accounts because we do not do payouts in sim at all. Once you have built a buffer, which there's no consistency in after you pass, we put you in a live brokerage account and we give you access to our seats on the exchange. Our, for example, on equities, NQ round trip, you might find $5-6 elsewhere for a per contract. For us, it's about $2.20 right now. So especially if you're doing a lot of scalping, which we totally support, you know, those fees add up. So consider that too. So awesome. Maybe we have some more questions we could get to.
Cool. Yeah, I don't know if you guys heard, there's some props out there that are retroactively changing their scalping rules right now.
Mm-hmm.
It's a big headache for a lot of you guys that like to get in and out, including myself. Okay, so let's get back to some of these questions. How to know the key levels and logical levels that where I can put my stop loss and take profit. You know, I mean, that, you know, figuring that out for yourself is going to depend on your strategy. It's going to depend on how you're using order flow. But if you're talking about how you can use order flow to do that, let's say that you have a strategy that involves, getting in when X happens and getting out when Y happens. One of the ways that you can use order flow to help you manage your risk and your take profits is if you're using previous levels, say for instance, that have been tested, and like one of those levels that I was showing on the chart where you see there's clear definition in what's going on at that level. Now, it might not mean that it's going to hold, but it might mean that you have a better chance at placing your stop underneath where those hard aggressive sell orders were absorbed, if that makes sense. So you have an area that's been proven to be defended from passive buyers and aggressive buyers. Placing your stop under that could be something that you utilize for your strategy to help dial in your stop loss. We got Sherwin Mentor saying, I'm using Sierra chart since 2018. And then Simon, do any of these lads have a demonstrated track record based on live trading results? I imagine all of us do. And I'm sure, you can reach out to any of us and ask any questions you have based on trading performance. And then what's better and why, DOM or heat map? Both shows the limits and market orders. I'm going to give that one, Niels, I'm going to give that one to you.
Sounds good. So can you repeat the question? So what?
Sure. What's better and why, DOM or heat map? Both shows limits and market orders.
Right. So it depends on how you use the DOM, right? So the heat map shows you the historical levels, right, of what the numbers were, where the bids were, where the asks were, and how they changed over time. The DOM just shows you what's right now, right? I think that's the main difference. And the way I build up my DOM is that I also show the contracts that are traded in there, right? So in maybe if you can show my screen. I'll try to blow it up a little bit so it's bigger. I think it's bigger now, yeah. So these are like bids and asks, and here you can see the executions. And in the heat map, for me, that's, I don't know, it's. I mean, I've done webinars for Bookmap as well, but it's like 6-7 years ago or more. So I've used it in the past, but for me, it was just too much, I think. So I think it's also a matter of personal preference, right? So that's one thing. So it has to fit your personality. If you're really scalping or things like that, I think it may be helpful. For me, it was too much, so I don't use it anymore. So I just look at the current levels, and you basically can see the same because it will still be the same numbers. You can just not see what they were a minute ago, right? That's the only difference. But you can see what's traded here, and I think what's traded is more important than where they bid and where they offer. So for me, that's the main difference as well, I guess. Yeah.
Okay. Great. And then we have Josh, TFD Josh, I think this is for you. We got to please discuss the use of Project X platform and the future process going into 2026.
So Project X platform, we are still in conversation with the team. So I know most props, if not all of them, are not in discussion with them. We still are in discussion with them, and it's about all I can say NDA wise. So
okay.
But we have just released for our Rhythmic platform. We still got the Delta platform. Delta Trader is still available. We have Atos now, so if you want Atos, we include that as well. Yeah, so that's sort of the plans there.
Cool. And the next, let's see, would love to hear if y'all use order flow on a previous day session to prepare for the next day. And if so, what that process looks like for you, volume profile, or are you going back through your footprint? Yeah, so I'm happy to take that one. If you actually go back and look at the last one, last interview I did with the Futures Desk, I explained what my process was, but the end result, so I'll tell you right now, my process is to download all the data. I get very granular with it, and then I categorize it based on the strength at the level, what's happening at the level, and why it was notated, and then I have a confidence score applied to it. And the end result that I have, let me go ahead and share this real quick. The end result that I have is, this is a kind of a simplified version of what I use the previous levels for. But here it is. So I have this map essentially that yeah, there we go. I have this map essentially that I create that has, different potential setups, and then game plan scenarios, based on these levels, bull continuation above 25,738, for instance. And then I have kind of scenarios or expectations that I'm looking for. If it holds, if it doesn't hold, potential range day, liquidation below these levels. So I know this is difficult to see. Let me see if I can zoom in. Here we go. So that's an example of some of these potential setups I'm looking for on a daily basis. So what I do is I take all the order flow data that I get from like this current day, and then on the following day, I will use AI to help analyze these levels. And I don't leave it up to the AI's discretion. I have a very tight process for feeding it the levels, and I have scripts that actually pull these levels out based on what I'm requiring to see out of these levels, whether it be, big bid to ask ratios, absorption levels, so effort versus price movement. And then this is how I will create my levels for the following day. And everybody, I would say probably everybody here uses this to some degree, whether it's through a volume profile or market profile, using past data to dictate what's important for the following day's trading, because we have proven levels there that have been proven to be defended or blasted through. So that's how I would say that's how I use it. And I would say that everybody else here is probably going to have some varying degree of usage that they use historical data in order flow to help them trade. Okay, let's go to the next question. Let's see. What significance do, say, 60 to 0 big ask or 0 to 50 ask have in spotting an exhaustive move? Would that be considered a failed downside or upside auction? Let's go. Who wants to take that on? I think we're talking. Yep, I think we're talking about exhaustive moves. Yeah, there we go.
Yeah, it means nothing.
There
It doesn't mean anything. If your focus is on that type of micro imbalance, then likely your lens is too small to act on it.
I love that answer.
I would like to add, it doesn't mean anything anymore. It used to mean more, and I used to watch it years ago, and it used to really, really work. And for like, I have a chart up right now. It was on my like this is a footprint chart from 13 years ago, and it's very old, but maybe you can show it. Yeah, so this is an ATIC reversal chart from 2012.
Yeah.
And it did mean something there. So the market was different, right? So the market completely changed. It was so thick, the books were thick, the bids and ads were not like they are now. There were like probably 1,000 on every level bidding and asking. It completely changed. Like now it's empty, right? So you have 50 lots, 40 lots on each price, which is still I need to adjust to, but it's just completely marked. So it used to mean more. So you can see a zero prints here, and they used to mean more. Yeah, they used to mean more, and it's just a different market now. So right now, because you can swipe the market with basically 100 lot, you can do it yourself. It doesn't mean anything anymore. So it used to have some significance, I'd say, but yeah, that is kind of went away, I feel. Yeah, it's
a great example. Yeah,
I think what you have to realize is a lot of these buying and selling algorithms that are happening at the institutional level, they're moving so much liquidity now, and you're just not going to see. They're not going to play their cards. They're not going to play all their cards on the table. There's always what is referred to as iceberg orders. They're doing it over a range, and just if you're thinking direction is indicative of a single 100 bid or 50 bid, that's just not what's happening.
No. Yeah. And especially so because people know that icebergs draw attention, right? You can see it. You can easily spot it now. So if they really want you to not see it, there's no way they would do it like that, right? So they would just burst out one lot to several range of prices. Like it won't be one iceberg that's doing that at all if they really want to hide it. So Yeah, it's just,
That said, there's still a pattern to be had. So if you
Sure,
can
Yeah.
if you can reverse engineer the fact that they are using it against you,
Yeah.
there is a strategy there.
Well, Josh, that brings up the thing that, so there's parts of markets that never change, right? So what's the part that doesn't change is that you have participants who need to move large orders. That doesn't change. Like, that still has to happen.
Mhm.
But there are parts of markets that do, like the mechanics of how they do that, the liquidity of the book, the time of day that they execute on that, the responsiveness to hedging flow, that's all changing and getting more concentrated. So those are the things that we have to adapt to.
Yeah, absolutely.
That
And,
the screen that you showed there, Niels, at those times, ES was more liquid than ZN. Much more liquid.
Yeah.
But now on ZN, you've got 6,000 loss per level.
It traded like corn.
Yeah.
I know, right? They're different.
Very different. You still can use the zero prints on treasuries if you want. The exhaustion, overall, the exhaustion is still the same. Exhaustion, the name says it all. No, you reach some high, reach some low. The tape slows down. You've got this first scene. So for a reversal, it's just the zero print on a thick market. Will definitely show you clearly who is the last one that bought, who is the last one that sold, and then over the closest 1, 2, 3 ticks, you will see all the reversal action. So you will see that there is less selling, there starts to be some aggressive buying, you will see that there is liquidity building, supporting the move, and then eventually it will sweep away from the level, not building liquidity step by step, from liquidity built from those that cannot go into the get their price, because a trend is created mainly because, at least on thick markets, because not everybody can get the price they want with a limit order. So they will buy at the market or sell at the market. And so it will create supportive liquidity to the downside, supportive liquidity to the upside. But the exhaustion is always the same. It's just that on ES it won't mean anything now, but on thicker market it still does, because the process is still the same. You just see clearly who was the last one. That's it. Yeah.
So to stay on, I guess, the vibe for liquidity, order flow. If we're just let's take the definition of order flow as looking at short-term limit orders and kind of looking at the tape in that perspective. Now that the holidays are approaching, volumes brought down quite a bit. How does that change how you guys read order flow and or use it?
A lot.
Anybody else have anything to add to that? Feel free to
Yeah,
jump in.
I would just say it makes it a lot more difficult to read, because when you're, in order flow, a lot of the times what you're looking for is extremes. You're looking for extreme aggression, or you're looking for extreme tests of levels. And so when you don't have that sort of extreme volume coming into the market, it's really difficult to tell if you're looking at wishy-washy price action, or you're looking at a level that might break out, but it's so low volume, you just have no indications that it will. So that's kind of what I observe, is like when I'm sitting here looking at order flow and low volume, it's like it's kind of like looking at something moving back and forth without a whole ton of direction until you get maybe a meaningful test. But in the meantime, I'm looking at these footprint charts like they're just kind of dancing around all over the place, potentially disrespecting levels.
Yeah, for me, it would just invalidate the day to trade, basically, especially with rollover.
That one.
Yep.
Just
not every day is worth your participation. And that's one of the things you have to figure out.
Exactly.
Right?
Absolutely. I get to that point. I think a lot of traders would find benefit in, yes, order flows, the short time frame thing, it helps fine tune it, but taking a step back is almost always helpful. Looking at a bigger picture, getting context of the market. So if you are struggling with your trading right now and you're hyper focused, you've zoomed in on one DOM and you're looking at what's happening across these four price points, you might be doing yourself a major disservice. And it's easy because that's the thing that's moving the fastest, right? Like that's the thing that's going to give you the quickest feedback. It's going to give you that rush that you got something right, you got something wrong. And that's not always the best thing in long term for your results that you're looking for. So when it comes to order flow, if you are thinking of order flow, and order flow is great in that stance, take a step back and make sure you put everything in context, because trading is context. Everything is about context. You are not a high frequency algorithm.
Right. There's no way you can do it all day.
Exactly.
And you're not
no
moving
way you can do it
5,000
all day.
contracts today.
Right.
Different game.
Exactly. Yeah.
I've burned my mind scalping the ES for years with NQ, like scalping for a few ticks. I burned myself, like really burn out.
Your eyes will go red and you'll convince yourself you see the algorithm.
Yeah.
There's a
Yeah.
You become the algorithm. Yeah.
yeah, or you wrote the algorithms like the name that shall not be mentioned here.
Well, I think there was a
I
comment.
can
about-
trade. I can trade.
I can't trade. Yeah.
Here's like someone asked, like, what's our opinion of that? And I would just say, who hurt them as a child?
The one
I
thing
feel-
I hate most
I
is
feel bad
the
for 'em.
term liquidity, or at least the way they use it.
Yeah.
It's like liquidity is sweet, but like there's actually no volume getting filled. You know, as people that look at the DOM and the footprint, it's like, oh, what big liquidity, right? It's like, well, you actually take a look at it.
Right.
It's not really
Like
much
that, like,
volume.
like they're going to try to move the entire market down so they can get to 14 contracts. That's what the whole thing was. Yeah, for sure.
Oh my goodness. Some of these comments. Oh,
Yeah. Do you want to pop another one up on the
Yeah.
screen, Rob? If we still have questions, I guess we can stick around. I don't want to use too much time from all these guys. They do have other lives.
Can you
that's-
explain how some institutional orders don't show up in order flow? I understand that they can route orders differently.
They cannot.
You
No,
cannot.
None of
they
it's
all
futures.
show
If
Futures,
you
no.
could
No.
you could hide your bid or your ask by using the block trades and
Yeah.
in the dark pools. But
Yeah.
what will be
Yeah.
executed will be shown on the
Yep.
tape. There's no exception.
Yeah, you're talking about equity trading. So in the equity markets, not in the futures equities, but actually NASDAQ and those kinds
Actual
of things.
equity markets.
lot of fancy hidden orders, and again, just like they're saying, dark pools. That's what's actually amazing about futures, and props to the CME for how they do it, because it's one single source of truth.
Mhm.
You don't have strange stuff going on other than what you can see. If it's happening, you can see it. If someone has intention, which turns into iceberg orders, iceberg order isn't a special order type that the CME allows you to do. That's just the intention, and it's running on some other system by the participant in the market. But fundamentally, on the books, there's no such thing as dark pools. There's no such thing as iceberg orders. That's all foreign terminology.
Yeah, there are block
You got block
Jagger
trades.
said, there are block trades. Yeah.
Yeah, block trades.
Like
are-
if you're a big trader and you've got like 50,000 lots that you want to be executed and you need to match somebody on the other side, then the CME will allow you to get into this agreement that is special, but it will be reported. Well, you will see it executed. First of all, in the moment it is executed, you will see it. But 15 minutes later, if you subscribe to the notification by the CME, you will get the notifications that a block trade was executed at X time and X price.
Yeah.
So no other way.
Yeah, that's why you'll sometimes see 100 or 200 lot not move. You know, execute on the bid or the ask, not move a single tick.
Mm-hmm. Yep.
Options flow.
Oh, well.
Thoughts on effects on futures markets?
Will only
I-
get
I'm
better.
really
Only get more
I'm-
important.
Yeah, I'm really enjoying digging into options flow right now, and intend on really digging in over my Christmas break. I think it has a huge impact, and especially when there are things happening in price action that maybe don't make as much sense. I've found that leaning into the options guys in my stream can be helpful in providing some context, because they're looking at, they're looking at gamma flip zones, which is just not something that's apparent. And, if you're just looking at a price, or price chart, and they're looking at gamma flip zones, and they're looking at charm, through the passage of time, and how that can impact price action towards the end of the day. And I find it to be useful, especially when I'm looking at a zone and thinking, if I enter right here, I'm about to get chopped up.
Yeah.
So I think it's
how
incredibly
many
useful.
of the last OPEX were the highest OPEX ever?
I think every last one, no?
Yeah, at least the last 10
It's
were the
getting
highest
bigger and
gamma
bigger.
ever.
Mm-hmm.
Like it's just more and more and more and more.
More and more, yeah.
Mhm.
Absolutely. OPEX.
Yeah.
If institutional investors don't want to be repeated, then why do they use iceberg orders like this? 100, then 100, then 100, etc. It's too obvious to spot. Why not 99 plus 56 plus 87?
Well, one, they
do.
don't care about your stupid scalp. So
Yeah, but
like
they can variate the number also. It's just a different
I
algorithm.
mean, they can, but it's not like they have to be cute. I mean,
Yeah, exactly.
it's easier. It's easier to reconcile in their books.
Probably easier to
I like
execute.
to. There's this little game. It's like a worm game. I don't know if a lot of people have played it, where you start off as a really small worm and you eat the little pellets and you get bigger, but eventually you start seeing that you're just a little worm and these giant worms coming across, and they don't care about you anymore, and you're sort of like that small liquidity. Like, yeah, sure, they'll eat you if you're there, but realistically, what are they looking at? They're trying to do these massive move, lots and lots of contracts, way more than what retail is doing. I think I don't remember the percentage exactly, but retail is some very small percentage, maybe around 10%, something like that, of the entire all the liquidity in the markets. So we're just side effects of what they're trying to get at.
Yeah.
Yeah, what is it, gang? Is it $60 billion is the notional hedging amount for JP Morgan's quarterly hedge that has to be done for every 1% move in the SPX? Is that right?
I don't know. I think that's the
something
prayer I
like that.
say right before bed, but I can't remember it.
It's something crazy like that. So that's one position that JP Morgan rolls every quarter. They'll roll it again here in a number
It sounds
of days.
good.
And it's so large that they put about, well, I guess it'd probably be closer to 75 billion now, given the width of the market as it stands right now, just to keep that thing delta neutral from a market making standpoint. So there's flow that's coming in the market that has nothing to do with the directional position. It purely has to do with offsetting risk of this one position that JP Morgan puts on once a quarter and then rolls it.
Just a different game.
Different game. Yeah. Doesn't mean that there's an awesome
alternative hats. Yeah, sorry to interrupt there.
No, I was
Alternative Hats says, how long are you holding your trades? How do you catch longer moves of price travel based off really short-term, real-time data? Experienced trader looking into order flow for the first time here. Anybody want to volunteer to take that? I'll take it. You know,
Go for it.
you know, in my experience, you know, it all comes down to, you know, first of all, do you have the right target? But if you're looking for, you know, short-term data that's going to verify you're moving in the right direction, just like when you're looking at a candlestick chart, you know, you might see a trend move up, or maybe it's sitting on, you know, like a 20 EMA or something like that, and it keeps bouncing off it. What I'm doing is I'm looking for that, but in the candle, verified by volume and how we're reacting at various levels that have been previously tested. So I'm always looking for stair stepping up, or, you know, the bid being lifted, for instance, by passive buyers, or the offer being lowered by passive sellers. So I'm looking for stair step action that verifies the move that I'm in. And if one of those levels gets broken, for instance, and if we're looking really short term, I'm in a long move and I'm looking to take it, let's say like 80 points. And about midway through, let's say we start breaking down and that stair step is no longer positive, it starts becoming negative. I'm usually looking for, like, if the previous let's say resistance level, and let's call that resistance level being a large passive buyer, we break through that level and now we get back to that level and that level starts breaking down. That's kind of my first indication that I should be potentially discounting this trade in my mind. Like, if it was an 8 before, maybe now it's a 7. And now if it breaks down from that level to the next level, and I'm talking strong levels that are verified through whatever your version of like order flow verification is. Once you start seeing those levels break down, that to me indicates I might consider de-risking in the scenario. But if you have stair stepping up and you have price action that is aggressive, and you have orders that are aggressive in the same direction as your trade, that's how I typically am able to hold on to trades a little bit longer. Is if just like with any other sort of indications you get throughout your trade, if it's moving in your direction, if you have volume pushing in your direction, and yeah, you might have a pullback, but that pullback maybe happens to a previously tested area that then holds that second time. That's extra verification that you can potentially hold on to that a little bit longer.
And I'll add to that, it really just comes down to your plan, right? And then I think Josh was talking about earlier about his 4 steps is like, before you get into trade, you have to know your target, or ideally what you want to see.
Yep.
Right. And
I got to bail. This has been awesome.
Yep.
Yeah. 2026, I'm just going to make my playbook public, so I won't answer the question. I'll just, if you want to follow our stuff, everybody needs a playbook. I could give you my playbook. It doesn't mean that you're going to win. But at least it could give you something to riff off of. But man, all of you guys are great. Thanks. I've learned something from all of you, and really great to connect. Hope everybody has a great holiday season and great new year.
Yeah, I appreciate it,
Absolutely.
Josh. Thanks for joining.
Appreciate it, Josh. Take care.
So
about iceberg orders, I wanted to make a note in the bank a little bit of the magic behind the iceberg orders. Rizzo, if you could share my screen, I will show you something interesting. So this is TT, Trading Technologies. It's like the institutional platform by definition, no? And if you go over here, you get the order types that you can, the predefined order types that you can place. Now they have a ADL algo design lab where you design your algos that you execute, that you're an institutional player that plays like 10,000 lots per day, and you can design your algos, but even now. And you get, what do you have here? TT iceberg. I mean, it is already there, no? You can display the quantity that you want to see. So for example, I'm an institutional trader. I set the TT iceberg type. I place my trade over here, and it's just a way to execute an order. And the fact that that's nothing special behind it. I mean, if you go to the page, if somebody is curious, if you go to the TT library, they will explain you what is really an iceberg. No, it's not something so exoteric, magic, dangerous. No, and it will explain to you perfectly what are these kind of orders do. There's a lot of stuff here that there are machine guns, like when you see a lot of orders shooting out of nowhere, like 200 lots shooting one by one in an instance, and you see it on the tape. They have it as well. It's all available over here now. And imagine whatever else they can build. It's an infinite amount of stuff that they have that we don't.
Yeah, and we don't need, by the way.
Exactly. We don't have the size to.
No.
No.
We're irrelevant.
Real quick, we got a follow-up for you, Jagger. Thank you for the reply. My second question is, what did Jagger mean when he said the SPY options feed is the most important thing to look at the beginning of the discussion?
SPX, I think that you mentioned. Yeah, it's the SPX. It's the discussion that we've just had. It. The option space is so big now, like Josh just mentioned, like X said, and everybody, it's just that futures are made in our hedging mechanism for options trades, because the option market is so big now that after COVID, after they introduced zero DT and then they became popular and everybody can trade zero DT, there's the thing, the dealer hedging, their clients buying and selling options. It's more intricate than straightly buy and you want to go long and sell to go long, because you can buy or sell calls, you can buy and sell sol. So it's much more complicated. But what the dealers have to do to be delta neutral on their books is to hedge. So the futures will be like the mechanism, and they will to hedge, and they will fuel moves or they will fade moves depending on the options flow. But yeah, that's the current holy grail, you know. That's something that you should definitely study. It's complicated. I would say that it's more complicated than futures itself, because it's not so straightforward, but it's something that everybody should learn, definitely. Yeah.
And then
At
Jip
least a
Smith.
scratch of it.
Yes. Jip Smith FX, you guys think that one mini is too much risk for a 50K account? Without knowing your strategy, and if you're new, yes, I do. Obviously, you know, if you have a well thought out strategy and you have great setups and you're a seasoned trader, then maybe there would be an exception. But for the most part, I would say, you know, you got to think about this. How many times can you lose in a 50K account? Because you got about $2,000 worth of drawdown. And how many times can you lose in a row? And does that fit within your risk parameters to not blow your account using one mini?
Yep.
Any stories from larger? Did you want to touch on that, Josh?
No, I think you nailed it. 50K or not. So we don't use the terms 50K. I think we put equivalent so people can reference it when they're comparing what we're doing. But it does come down to the drawdown, risk per day, risk per trade. How many losses can you have in a row? And especially with markets now, I mean, the volatility is only increasing month by month. So a question you find about that even a year ago is going to have a different answer. It's going to have even more of a reason to trade micros now. I know people want to get aggressive in props. If you're trying to play a gambling game and you're trying to game the prop system and get your best return on investment for like the dollar and time spent, which, you know, is its own mini game that people play, I get it. But realistically, if you were trading your own account and you had 2,000 to draw down, trading minis would be a suicide mission unless you get lucky.
Yeah,
So,
there's no way.
yeah, I would say if you're asking the question, you should be trading micros. And if you want to trade minis, there's a reason, like the maintenance margin for NQ right now is what, 30K per mini? And that's essentially their recommendation for risk per mini. So just to give you an idea of minis versus micros. Again, it's a whole big spectrum. Depends on what you're doing. You're taking really tight stops. You're trading the bonds. All those parameters matter to coming to that conclusion. But what I would say is just stick with micros indefinitely. And when you know the times are right, you'll know, and it's not now.
Yeah, so this is actually a good one. Trading for keeps, 007. For me personally, I find that order flow is irrelevant until I am in my higher time frame execution areas or exit areas. Otherwise, it's too much noise. Agree or disagree? I think we'll probably have a wide variety of takes on this.
I completely agree. No.
Yeah, I think that.
Yeah, go ahead.
Go ahead, Rizzo.
I think unless you're on certain substances, you can't be looking at the DOM with a footprint every freaking tick all day, right? And especially for me, I'm typically trying to catch rotations, so there's no point in me looking at it if we're not coming into key levels or at least key zones, right, or edges of balances and thing. So that's when I start to pay attention is when we come into levels that I have drawn out in my plan, and typically they're at the edges of balances and whatnot. So
yeah, even I mostly agree.
Yeah, I mean, there's like too much to pay attention. Like you know, like let's say I get positioned and I'm continuing to look at the order flow every minute, every couple of ticks. It's like if I'm changing my mind every other second, it's way too much decision making.
That's Johnny's order flow decision maker right there.
Exactly.
Yeah, this is my order flow mascot. Here, come say hi, Coda. Hello, bud. Oh, hello.
Oh man, you're making me miss my dog now.
He's a good boy. Let me put him inside real quick.
So any plan supplement deep charts, volumetric into TFT? I will say I've talked to them. So without giving any more information, I have talked to them. Wait, tool software to automate order flow strategies. These volume profile delta. There are a million ways to automate. Is it difficult? Yes. Is it easy to get basic automation done? Yes. Is basic automation going to make you profitable? Probably not. That's my thoughts on that. We all want to automate this stuff, but going deep on really high frequency monitoring of order flow. There are a million platforms. You could build an API. You could build the code against an API yourself. But what I would suggest, if you are going to start automating things, use an existing platform like Quant Tower, Motive Wave. They all have some pretty good SDKs for building your own indicators and strategies, and you'll save yourself a lot of work because you can lean on the connections that they have. So you'll have at least Rhythmic, CQG, and then more. You'll get the visualization of the charts themselves, so you'll be able to monitor your trading. I would definitely lean on a platform if you're going to build any sort of automation. And both those platforms do support order flow data, which is essentially resting orders and the tick data. What is Delta and how do I use it? Well, there's Delta Trader, which is this platform that he's pulling up. And we have the founder here, Niels. He can talk about that. And then there's Delta itself. I'm not sure which one they're asking about. Okay, maybe we wrap it up here. Maybe one last question. Payout options. Okay. Can you tell me about liquidity? It might be too general of a question, my man. Yeah, liquidity is yeah. I'm not even going to try to answer that.
You know, one thing I would say, and just to retouch on what we were talking about before, you know, I think a lot of people that hear order flow that talk about liquidity come from, you know, that the school of thought of maybe they're ICT students, maybe they just hear it thrown around. But what I would say is that if you're curious about those things, it's probably worth it for you to at least start looking into order flow, because if you hear these things thrown around and you're looking at resting liquidity just because you have an equal high, or if you're looking at order flow and you're just looking at candlesticks and you have a curiosity about it, actual order flow is probably going to satisfy that itch, because it actually goes into why is liquidity there, or how can you tell if liquidity is there? And if you're talking about order flow, just potentially being like a fair value gap, or liquidity being in a fair value gap, what you're really trying to get to at the root of it is trying to understand if this fair value gap is meaningful. And the only way you're going to know if that fair value gap is meaningful is if you actually look into what volume has transacted in that area. So what I would say as a blanket statement, if you're asking about liquidity, if you're curious about order flow, and you don't know what it is, probably look into it, because it probably will satisfy that itch. And for anybody out there, you know, we got Niels here, Rizzo here, myself, Josh. I think any of us are happy to, you know, chat with you about it outside of this discussion, you know, to offer our help and our experience and what we could do to help you get you on the right path to learn what you need to learn about order flow.
Also, so you guys know, everybody on this chat has their own community for the most
and Jagger,
part.
I thought Jagger was gone. Apologies.
Yeah, I'm
Came back. So if you guys want
Sorry,
direction,
Josh, go ahead.
it's okay. If you guys need any direction to get into their Discords or whatever they have to offer in forms of community, you can either, I think I'll have Raj make sure he updates the YouTube description, linking to what he can, but you can always hop in our Discord and ask, and we can direct you as well.
Cool.
We do appreciate you guys all coming on. Okay, last question.
And as a serious retail trader, am I obligated to follow what's happening in the world of options? Because it's a whole other world for me that I really don't understand. It's a tough one. I mean, it's tough. You don't have to.
You can
for
get by
sure.
without it.
I mean,
Yeah,
I don't really, but I know normally it just, you know, the magnets are the big numbers, right? So like 0, 50, you know, things like that.
Yeah, and they'll give you decent reactions
prices
too.
Mhm.
We can't ignore them. It's tough.
Yeah, I mean, yeah.
Keep an eye on it. Learn about it. It's not going to prevent you from trading successfully,
Right.
but it is edge that you could be missing. Let's put it that way. Okay, cool guys. Appreciate everyone coming on.
All right, pleasure speaking with you all.
Yeah, thank you guys.
Yeah, very nice.
Hey, and
Yeah.
all the Orderflow guys out here, is really nice to meet y'all, and looking forward to learning from you guys too. And Niels, I'm definitely gonna be checking out that platform.
Nice.
Yeah, which is free if you guys have a Rhythmic account with us. It's right there in our dashboard, so you can just click right through and get using it right away.
Yeah,
Cool.
happy to help you guys set up. So just DM me whatever.
Awesome.
Well,
Well, happy
guys.
holidays, guys.
Happy holidays, guys.
and
Merry Christmas.
yeah, I hope y'all have a good one.
Likewise. Merry Christmas, y'all.
Thanks everybody for
Right.
tuning in.
See you guys.
Bye-bye.
All right.